The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks for tuning in, starting your trading day off right here at TFNN. And we have the S&Ps this morning, picking things up in positive territory. We have a little bit of volatility on some GDP numbers. And let's kick it off with the headline this morning, because this one driving a little bit of the volatility. And we'll get into yields, but the economy. How about a 3% growth? After the reversal, the number comes in, GDP. You're talking about coming in right now for the second quarter at 3%. The estimate was 2.6. Personal consumption, 1.4% increase, a little light versus the 1.5. And then you have the PCE price index coming in at 2.5 versus 2.3. But some strong numbers on the GDP front. The Journal, U.S. economy grew at 3% rate in the second quarter. And yeah, quite a rise from where we were last quarter. Now, there is some volatility going on in terms of the tariffs, okay, in terms of imports, in terms of exports. We'll get into that in a moment, but let's take a look at the charts. S&Ps, we're up by 3 points right now. And you see a little of that 830 volatility, but nonetheless in positive territory. NASDAQ 100, we're positive by 26 points, or about 0.1%, 23,478. The Dow, we'll call it flat, slightly in the green at 44,818, and the Russell up by 0.4%, 2262. Bitcoin up about $300 at 118,620. Ethereum up $17 at 3807. You have crude right now. You talk about a run yesterday. We almost hit 70 in the overnight session at about 4 a.m., and we're right back up to that level right now at 69.42 in the price of light sweet crude. Higher prices in that crude market. All right, let's jump over to yields. The dollar. And, of course, how that contributes to the price of assets. When we have the 10-year right now, we're down by 8 ticks. You're talking about a 10-year yield of 4.36. So what do we have? On the heels of a hot GDP number, yields are one of the things that are moving dramatically to higher yield. We got a hot economy, right? Hot economy. You jump over the DXY, and, yeah, pretty remarkable. Yesterday you had dollar strength. Today we got dollar strength. Yesterday we had lower yields. Today we have higher yields. No matter what's happening right now, we got a dollar bounce going on. We're coming up to the critical 100 price point. Nice round number. That's also where we bottomed out in September of last year. And yeah, the dollar quite a bit as we have yields rising to 4.36 this morning. But keep in mind, as in even with yields at 4.36, you got dollar strength right now, bouncing. Now, that's a tough go around for the metals. You have gold down about $14 right now. And again, keep in mind this rollover, okay, if we were talking about the same futures contract and we didn't roll over yesterday, we'd have gold at about $33.13. Okay, we're down by $14. We're right where we rolled over. So yes, we're at $33.67, but you're talking about futures right now, okay? And we just rolled over. So if we had not rolled over, we'd be near the bottom portion of this area of about 3,300 right now. Nonetheless, you have gold negative by $15 on a little bit of dollar strength this morning. Silver down 65 pennies at 37.63 this morning as you have gold pulling back, silver pulling back. We jump over to copper. Down about 16 pennies as well. Copper, you get that extreme volatility on some of the metal tariffs. You spike up to $5.95, and since then, pressure to the downside. You look at that selling we got on Monday. That was some selling in that copper market. Okay, let's get back to the numbers on the GDP this morning. Now, what do we have going on today? It's amazing that the Fed almost gets lost today, and it doesn't, okay? We have a Fed decision today. Chairman Powell, he is in focus, but don't expect him to say anything. Don't. There's no reason. Any headline's a bad headline, right? He wants to make it through this meeting with no headlines. That's his goal. There's no reason to make a headline right now. He does not have to make a headline, okay? They're going to push things out to September. They're going to be data dependent. They're going to get a couple months of data before they have to make that September meeting. Okay? And right now, the market's pricing in about a 97% chance for today's meeting. They do nothing. There's a 3% chance, probably built on hope and nothing else, that they cut. And then you go to the September 17th meeting, which is where things get a lot more interesting, and there's a 60-40 chance right now. When you go to CME, FedWatch, swaps, 60-40 chance that the Fed cuts 25 basis points. I'll pull it over. This is what we're looking at. This is the September meeting in focus. If anything, this is what he's going to talk about. 60% chance we go to 4 to 4.25%. We're currently at 4.25 to 4.5%. You push it out to December, and the market's thinking 1 to 2 cuts. With a 20% chance, we get 3 cuts. Now, here's what's remarkable. The market is pricing in that we get 3 cuts by December, and yet the market's pricing in there's no chance that we get a cut today. That means that the market gives a 1 out of 5 chance that we get 3 cuts with the 3 meetings left in the year. Even if you get 2. Okay? There are cuts priced into this market right now. So don't think that you're just going to get a cut. You're going to get a cut in September, and you're going to have rates drop dramatically. This market is pricing in cuts where we are, with the 10-year at 4.36% right now, with the dollar sitting at about 100. You're pricing in 2 to 3 cuts. And realistically, right, the last part about this, because I was looking at this morning, let's assume today's meeting there's no action. 97% probability. Very surprising if Powell were to do anything without giving any indication that he would, right? That's not happening. So the Fed's going to stay where they are today. They could indicate they're going to do something, but let's say they're going to stay. We have 3 meetings left this year, okay? And even in the context, are we going to overperform or underperform where the market's pricing things? Geez, folks, I'd say it's pretty aggressive right now. 3 cuts by December when you have GDP rising 3%, right? I don't think Powell has 3 cuts in him. I don't think he's got 2 cuts in him by the end of the year. I think we're going to get 1 cut. And they're going to proceed cautiously. There could be some lag with the tariffs. And we state the obvious. Okay, and talking about some of the numbers that went into this GDP number. So it's a big number. 3% rise annualized in the second quarter from a dip lower in the first quarter. But you get into the inventories and the exports. Trade swings. Let me even blow this up, man, because this is an important one. Trade swings continued to play an outsized role in the second quarter. Imports plunged at almost a 31% pace after business front-loaded purchases in the first quarter, while exports fell at a 1.8% annual rate. Inventories, okay, the pace of restocking their shelves subtracted more than 3 percentage points from the headline growth number, right? So you have imports plunging, you have inventories subtracting more than 3 percentage points from the number, and the second quarter, started the tariffs. The delays in those tariffs helped ease some of that concern, but we're going to see some of this data still shift through. Procter & Gamble says everybody's using their pantry inventory. Is that really what's happening? That would not be a good sign. We got a lot to talk about, folks. It's Fed Day. Stay tuned. We're coming right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. All the markets in the green. We take a look at the price and volume of this market. We had some selling yesterday. I was talking about it on the programs yesterday. And yeah, we had some selling, but didn't even come in as strong as it could have at one point. When I was doing the program at 3 o'clock, we had an hour left to go in trading, and you were almost well ahead of anywhere we've been. We closed out on pretty mediocre volume as the market just sailed into the close yesterday. And yes, we got a little bit of a volume spike there, but all things considered in terms of some of what the spikes look like, and I'm not even going back to the spikes of April 7th, all of that nonsense, in terms of, benchmarking against 3.5 million contracts. No. I'm just benchmarking them against some of the volatility we've had recently. And you're talking about a move in the S&Ps of about 1 million. So very difficult for this market to get any volatility with some momentum, right? Yesterday, a little bit of a spike in the NASDAQ, 530,000 contracts. And, of course, we got Microsoft and Meta today. Now, Meta shares, quite the sell-off yesterday. You did it with some volume. But, again, nothing in terms of sticking out versus where we were. Nothing like April, nothing like the end of April, and doesn't compare to some of the larger volume days that we've had over the last couple months even on Meta shares. Nonetheless, you take a look at this thing short-term. You were ripping lower all day from $720 to $700. You give up $20 of action intraday, and they're going to be coming out with their numbers after the bell. And you're looking at about a $40 move in either direction on Meta. How about that? $700 on the dot. Nice round number to put it lightly. So $40 on Meta shares after the bell. We also get Microsoft. Microsoft, you're looking for about a $19 move on a $512 equity. Not a huge percentage for Microsoft in terms of the volatility that could be expected coming in for their earnings after the bell. All right, we jump around to some other movers. So, in the age of cybersecurity, Palo Alto Networks, they are buying CyberArk for $25 billion. And yeah, you rip lower on the announcement of that news. The news was out yesterday. They were considering buying them. I think I saw 20 billion, 25 billion. No, excuse me, 20 to 21 billion. The news hits that number comes in at 25 billion. You jump over to CyberArk. No, that's not it. Excuse me. What is it? CYBR. Yeah, that's them. Let's see. Yeah, CYBR. Yeah, this is it. Yeah, he rip higher. What's going on here? Yeah, that's CyberArk. They're still only printing at 431. So the reason why it gives me pause here, so nonetheless, Palo Alto, they're going to use this deal to officially penetrate the identity security market and improve its multi-layer offering for customers. And boy, it's going to be interesting to see how cybersecurity and AI are going to be battling it out. Saw an interview with Sam Altman from OpenAI talking about anybody that's using voices to pass your identity, that one's solved. Done. All these companies where you can verify your identity with your voice, if you ever do that online, get out of that right now. You think you're exposed, that's the easiest way for AI to get into everything. But yeah, there's probably a crisis coming with AI and the ability to infiltrate some of those tests that mimic a human, to put it lightly, that mimic any human, right? You're talking about whether it's identity, whether it's voice. CyberArk offers a quote-unquote foundational technology necessary in the AI world. And they create identity software tools that grant employees access to platforms and applications. It's a good business to be in, but boy, they're going to be busy fighting AI, to put it lightly. All right. We talk a little bit of jobs. So private payrolls. Can't believe it's already the end of July. That just that quick. Feels like we were just talking about June employment. But yeah, we got private payrolls. 104,000 for the month. Now, remember that private payrolls in June decreased. And that sent fear throughout the market until we got non-farm payrolls, which was a big number. You get an increase of 104,000 for the month. The market was looking for 64,000. The June number was initially negative 33, so you actually add 10,000 extra jobs in June, so the net number comes in at almost 114,000 when you include that. Leisure and hospitality, man. And I say man as in the haves to have-nots. Leisure hospitality on a high end, it is just through the roof right now. Whether you see the CEOs of Marriott, etc. Financial activities, 28,000. Trade, transportation, utilities, 18,000. Construction, 15,000. On the downside, education and health services, almost 40,000 jobs lost. And yeah, we got non-farm payrolls on Friday. And they're looking for about 100,000 jobs in July, with the unemployment rate expected at 4.2%. Wages on the ADP went up by 4.4%. You got wages going up 4%. That's a good number when you're talking about inflation factors. And mortgage, right? Mortgage demand drops to lowest level since May. Interest rates stall. 6.83. Might as well be at 7%. That's what it feels like when you're up there. Now, this is going to be one of the more interesting factors when you start getting some Fed cuts, how that's going to contribute to the 10-year, how that's going to contribute to mortgages. And that's one of the reasons, though, that Powell's probably being so cautious. There is a huge amount of savings in people's homes, in the equity in their homes, and that is going to be a very stimulative effect on the economy. And at the same time, you might have inflationary forces. You're going to have stimulatory effects that allow those inflationary forces to permeate. That's the fear. We'll find out today from Chairman Powell. We're coming back for the open, folks.
Getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have equities open. You have an S&P up by 2 points, pulling back a little bit this morning from that 8 a.m., 8:30, I should say, volatility. But nonetheless, we got S&Ps up by 1, NASDAQ 100 up by 15, Dow slightly in the red this morning, and the Russell leading the way up by about 0.5%. Jump over to UNH. Quite a trade to lower price yesterday, and we'll see if we get some follow-through today. Right now in the open, you have UNH up by about 0.6%. We jump over to other equities with action today. Starbucks, a little bit of a lift on their earnings. So we pull over Starbucks. And here we go. So, turnaround is ahead of schedule, says the CEO. Same-store sales, they're still going down, right? Stopped and got a little Starbucks yesterday afternoon. I was talking to my mom, telling her about the woes of Starbucks. And you wouldn't believe it if you'd always be looking at, take a longer-term look at this equity. Yeah, from 126, and boy, you back it up. Right, the CEO gets replaced when this equity was at about 78 from 126. And yeah, getting back into the details, same-store sales falling for the 6th straight quarter. The company, quarterly revenue estimates, they beat them. Sales in China rose. Some of the highlights, earnings per share, 50 cents adjusted. I love when they say, and not immediately clear if it was comparable to say, you can fudge those numbers so much sometimes. They even have to say it's not immediately clear whether that's comparable to what we're looking at. Revenue, hey, that's extra revenue. You can't fudge the revenue. 9.5 billion versus 9.31. Doubling down on hospitality. Green apron service. We were talking about this a little bit yesterday. Okay. Now, net income, almost 560 million or 49 cents a share, but down from 1.05 billion a year earlier. So a discrete, this is, it's amazing, these small little, a discrete tax item and a one-time investment hosting the company's 3-day event for managers weighed on the earnings by 11 cents. Their third quarter net income was 49 cents a share. And then they have a discrete tax item and a 3-day event for managers that take 20% of that off. But they're trying to do a turnaround and they got costs. North American same-store sales fell 2%, but the market thought they were falling at 2.5. Transactions fell 3%, but guess what? People are spending more. That's not exactly the growth recipe, folks. Be careful on Starbucks right now. The first time in a year and a half that the company's China business saw same-store sales increase. Starbucks been weighing selling a stake in the China business, which could be worth up to $10 billion. So they're going to launch a protein cold foam. Interesting. Improved food options, coconut water-based drinks, a new Starbucks app, and a refresh rewards program. The problem is, folks, they're already doing pretty well. Okay? I was talking about this yesterday. You go into a Starbucks, right? Starbucks made their name for you can go in there and order a quad venti, quad venti espresso with sugar-free this. You can personalize those drinks to an extraordinary level, and they'll take care of you. That level of service alone is pretty extraordinary when you look at it versus some of the other coffee shops. You should be able to do that for what they're charging you. They already have great food options. Their app is already great. Their app revolutionized everything. Maybe it's time for an upgrade. Their app is great. The rewards program, I use it. I get free drinks occasionally. It's pretty good. I don't know how I see this having the huge impact that they're talking about it's going to have on Starbucks. That's me as a Starbucks consumer that loves it. And guess what? The market's reacting in similar fashion on the open. Still positive, decent numbers, but they're selling that number on the open this morning. Starbucks up by $3, up by 3.2% right now. Excuse me. All right, you jump over to Peloton. So Peloton's trading higher this morning. UBS upgrades their shares to buy from neutral. Neutral signal of the stock could nearly double from the current levels, is what they say. And yeah, I guess it's small prices. All right, we're trading at $6.77. You're down from almost $10 where we were trading in February alone. Just taking a look at the more recent action. You're up as high as $10 last year. You test that area again. Yeah, I just couldn't get above it. Look how you just couldn't get above it. You had a nice sign of strength on their February earnings. Following week, you trade higher on lighter volume. And then you drop off Yeah, you got a nice sign of strength in this $6 area, though, on Peloton. Look at this, right? You go back to March 10th, get some nice buying in there with volume. That's a nice volume spike. The week of May 19th, you get a nice spike from that $6 area as well. Some nice volume in the week of June 2nd. And then again, you bounce in the $6 area. You know, I like that trade. Maybe you get into that equity, you set a stop right below $6. You're risking 10%, just more than 10% on that equity. But you're going to have some volatility on Peloton. All right, interesting that this equity, you take a look at the longer term chart, okay, from $170, a pandemic darling, right, to $2 to $6. Well, you know what it reminds me of, which I was looking at? Teladoc. Yeah. Same thing. Pandemic darling. This one made it all the way up to $308, and you're trading at $7.50. And Teladoc is in the press today as well. Jump around. As they have their numbers. Oh, look at that. You give it up on the open. I was going to say you were trading higher. Look at this, man. Even this week, you're down from $9.14 to $7.42. Whew. So they lose 19 cents a share. The market thought they were going to lose 26 cents a share. Revenue of $631 million. Market thought they were going to take in $622. So they beat on revenue, they beat on earnings, and you trade lower. And you know what I was going to find is that at one point at least, these were two of the top positions in ARC. I wonder if I can find those holdings right now. Here, hold on. Yeah, it's not going to be the top anymore. We're going to pull them up. Let's see what we can get. All right, we're going to come into a break. Perfect, I got it. Let's see what we got here. This is the ARC top holdings. Tesla, never relinquishing that top, man. Over 10% of ARC. This is ARKK. We'll finish up. We'll talk about this. Nah, no Teladoc. Not anymore. We'll be right back, folks. Stay tuned. S&P's up by 3.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps just chopping around, up by 2 points right now. NASDAQ 100 barely in the green. Dow slightly in the red. We check in on yields right now. On a hot GDP number for the second quarter, you got lower price. You got higher yields coming at you. Now, we're not even back to where we were at the beginning of yesterday, though, in context here. Okay, you got yields at about 4.37 on the 10-year. One of the biggest moves out there, though, is the DXY. So you jump over to the DXY, and it's not stopping. We're pushing 99.50 right now. Take a look at the daily on this thing, and as I've talked about, all right, let's back it up even further. On a weekly, and yeah, that 100 price point, very critical area. Whether you back it up to the beginning of 2023, you were as low as 100.82. You were as low as 99.57, right where we are right now in July 2 years ago. You almost touched that number, down to a low of 100.617. in December of 23, and then you got back down to that area in September last year. You break through it, this is going to be an important area. Because, boy, if you ever catch a reversal here, watch out. Still think 90 might be in play. But, boy, we get some strong economic numbers going on. Now, here's the dichotomy here. We got GDP growing at 3%. We need cuts. We got unemployment that might be at 4.2% on Friday, right? Strong numbers in this economy right now, to put it lightly. All right, jumping back to ARK for a moment, okay? So, I'm fairly certain, I know she had Teladoc. This is Kathy Wood. Woods? I better get that one. Let's see. What is it? Shame on me. Yeah, Kathy Wood. She had Teladoc in there at one point. Pretty sure Peloton was in there as well. And to her credit, boy, two of the best stocks out there when you were riding the high times. Peloton from 62 to 170. Teladoc going to take over the telehealth world to 308 from 752. She might have had Zoom in there as well. Zoom's up to $600. It's trading at 55 to 74 over the last year. But you take a look at ARK. Now, this thing's been on a rocket ship, okay, since the April lows, almost doubling in price. As I just mentioned coming into the break, the top holding is Tesla. Some extraordinary runs on some of the other equities here. Coinbase, right, through the roof. Roblox, Robinhood, Palantir. She's been positioned very well. AMD, okay, Amazon, doing well, but not to the likes of some of those other ones. Let's see, what's DraftKings doing? They've been on a tear too recently. Not that much. Not even at the highs of the year. But the point being, folks, you got to protect your capital. And everybody has losses, okay? But this is a story that when you look at, okay, if you ever lose, and let's just go from 140. You don't even cherry pick the high at 159, all right? You go to 140, you're over leveraged, and you trade down to 29, okay? So what is that? Even going from 130, you lose 110 of that, almost 75%. Let's just say you lose 75% of your portfolio. You lose 75% of your portfolio, folks. Okay? You need to make 300% to get even. It is so difficult for this equity to get anywhere near back to where you were, let alone, okay, and it's just and we all know it, but it's good to be reminded. You got to protect those losses, man. You got to have stops in the market, okay? Because, holding this equity for the cascading from $120 down to $28, yeah, you got quite a run since then. But folks, yeah, that brings us back 5 years. You got to go back for the monthly. And what's remarkable here is she operates on a 5-year plan. Okay. You came into COVID more than 5 years ago, and the stock is barely positive, almost break even over that during a period of time. And if anything, technology accelerated more so than it would have, especially for many of the equities that she was in, whether you're talking about Teledon, anyway. So, protect your capital, folks. Okay, because the motto out there, it's not make what you make, it's what you lose. It's a perfect example. You can't have those types of losses. They can injure you forever. Now, if it's a high frequency trading account, but if you're talking about investments of any degree, you just can't have those types of losses. You got to get stops. You got to tighten them up, and you got to make sure your portfolio can't dip 75 to 80%. Because if it does, no matter how well you do in the future, you got to make so much money to make it back. The capital preservation, to a certain degree, is always something you should be thinking about. Heck of a run they've been on, but yeah, she's been positioned very well. Coinbase, right? From 150 to 450. Robinhood, from what? $29 to $105. Now, Tesla's her biggest position, though. You better be a Tesla bull if you're an ARK, man. And if you're a Tesla bull and you're an ARK, just go buy some Tesla. All right, buy some of those other equities. If you like the diversification, I get it. But you're paying a fee on top of that. So remember, the fee that you're paying, you hold this equity. I mean, what are we talking about now? We're talking about you got to hold this equity for what, 6 years to be up that much money? Well, those fees are going to compound over 6 years, folks. 6 years, folks. All right, we take a look at what else we have going on in this market right now. So HSBC out with their numbers. You're trading a little bit lower today. Take a look at this thing. All right, let's take a look at our banks. JP Morgan shares right now up by about 0.4%, just off all-time highs yesterday. And this deal with Diamond talking about that, the middle people of finance, like the Plaids, however you, and MX, and that they're overtaxing their system. He knows that they're coming for their business, folks. That's it. This is not about overtaxing the system. You had laws in place that allowed for free banking, that facilitated the development of those. And no, JP Morgan's trying to slam it down, man, and close that entire door. And for consumers, folks, okay, for those of you that love Venmo, Zelle, whatever it is, PayPal, all those services could go away instantly because they're a part of open banking, which was legislated and then overturned because the bank said it was too onerous. I mean, folks, this company with this stock chart has a CEO that's saying, hey, these regulations are way too tough. Folks, look at this stock chart. Okay? And that it's regulations are always too tough. Why have any regulations? Right? Just keep that in mind. Look at this stock chart. Are they okay? JP Morgan doing all right? I'd like some open banking. I want to make sure the Venmo, PayPal, Zelle, all of those stay around. S&P's up by 2. One more segment. Don't go away, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P's up by 1 point right now. We were just slightly in the red during that break. We're trading at 6407. Dow off by 47 points right now, 44,770. The NASDAQ barely in the green right now. We check on Microsoft and Meta. So they'll be out with their numbers after the bell. A little bit of volatility. Check that out on the open as people getting their ducks in order. Microsoft shares down by just pennies today at 512.18. Meta shares, I was going to say, look at that. Oof. Meta just traded down $10 from where you were on the open, man. Oof. A little bit of buying, a little bit of selling, a little bit of volatility, and then you get Apple and Amazon tomorrow. Same thing. Look at the spike we just got on these equities, and then you gave it up right on the open. And Amazon basically flat at 230.84. You check in on NVIDIA. Oh, doesn't stop. No selling on NVIDIA. Up by 1.4%. AMD up by 0.4%. We check in on the darlings. Palantir up by 1.5% right now. Yeah, look at it. It's all this. The Robinhood up by 2.4% right now to 105.77. All right, and August 1st approaches. We'll see how it plays out. But you're talking about 25% when you're talking about India. That's what Trump is putting out there. And yeah, he puts out there that the number is going to be 25%. No, we're sliding down there, and there we are. Trump says India will face a 25% tariff plus penalties for buying Russian goods. Well, we'll see. But he's going to penalize India for buying Russian arms and energy, and that kicks in August 1st, which, guess what, is Friday, folks. All right, folks, stay tuned. Basil Chapman, he's in the Tiger's Den. He's getting ready. He's coming up right now. So we got Basil coming up live with the Tiger Technicians Hour, folks. You got Steve Rhodes with the Trader's Edge live at 11. Fast Market at 12. Larry Pesavento will be live at 1 o'clock with the Trader's Edge. Then, of course, what do we got at 2 o'clock? We're going to jump on the air, folks, for the Federal Reserve statement, and then we'll have the press conference live at 2:30, and I'll be back from 3 to 4. Live programming all day, folks. S&P's flat. Stay tuned. Basil's coming up. Have a great Wednesday, everybody.